Welcome to Bulls, Bears, and Bill, a weekly Dalton community television program on the financial markets, brought to you by Bill Schmick, founder of Onota Partners, and me, Rachel Branch, co-host. And when Bill says financial markets, he means all of them. On each program, we will continue to share with you, our audience, why the markets did what they did and where they are going in the weeks and months ahead. Bill writes 2 columns weekly for several media and newspaper organizations throughout the country. The substance of Bulls, Bears, and Bill.
Thank you, Rachel. Glad to see you all again. It was a very busy week last week, but before I get into that, I realized something. I get a lot of questions in my columns. People email me and phone call me and so forth. And I thought you may have some questions out there that you'd like us to answer. So here we have an email. I'll wait a little and you can write it down. It is daltonctv@gmail.com. I'm going to repeat that. daltonctv@gmail.com. And if you have any questions whatsoever, either about this topic or any other topic in finance or in investment, don't hesitate to email, and we'll answer whatever the questions are on our next viewing. So, saying that, it has been a very busy week. Remember, this is usually on Monday that we're taping this. And this Monday coming up, we have 2 very important issues. NVIDIA, which is the semiconductor artificial intelligence mega cap company that the markets love. What happens to NVIDIA happens to the market. And their earnings are Wednesday night. And they have the strength to move the market either up or down simply by their own earnings. So we do have that on Wednesday. And then the other important data point for the week is the Federal Reserve Bank's most important inflation data point, which is the Personal Consumers Expenditure Index, and that would be announced on Friday at 8:30. But before we get into that, let's look at the week.
Okay, first question. Markets were down all last week until Friday. Then suddenly everything was up. What happened? Why do the markets feel so upside down to me? And I think just before I left, I heard the markets are down this morning.
And you're absolutely right. What happened? Well, if you recall last Monday, I was warning viewers to be cautious this last week. And actually, we had 4 down days in a row. Now, there was a mixture of why. Okay, but the real, I guess, core reason was the fear of what the Federal Reserve Chairman Jerome Powell was going to say Friday in Jackson Hole, Wyoming. That's where once a year all the central banks in the world get together, the hobnob. It's a big junket. And our Chairman Powell was scheduled to speak at 10 o'clock on Friday. And there were worries about what he was going to say. Was he going to be hawkish? Would he intimate that there is no interest rate cuts in your future? Or was he going to be dovish and actually give you a tiny hint that maybe, just maybe, if things went the way he hoped, that sometime in the future, and this is the way the Fed talks, they may cut. So you had the Bulls in one camp, the Bears in the other camp, but moving up Monday, Tuesday, Wednesday, and Thursday to that Friday all-important meeting, the market sold off. But I warned you viewers that could happen. In addition, we talked last week last week, can we remember last week? If you recall, President Trump met with Putin in Alaska, and there were great hopes over the weekend, last weekend, that the war in the Ukraine against Russia was on basically ending, and that this heralded, this meeting between our president and Putin, heralded the beginning of the end of warfare. It didn't happen. And we talked about it last week. I did have my doubts that it would happen. And I also told viewers that if it were the case that the hopes were dashed, and they were dashed starting over, Monday, Tuesday, Wednesday, and Thursday, because all Putin did was up the ante, bombing everything in the Ukraine. It's not what I would call the precedent to peace. So I had said to you that if this were to occur and there was disappointment, which there was, then probably the gold price and precious metal prices were going to fly, and they did. They recouped their losses, and for most of the week they were up. What happened Friday? Right out of the get-go, Chairman Powell at Jackson Hole basically said that policy was going to change and that investors could look ahead for a possible rate cut soon. Much more dovish than anyone expected. And this was at 10 o'clock, and by 10:30, the markets were soaring. Everything just flew. Stocks, interest rates went down, bond prices went up, cryptocurrencies just exploded. Gold up 1.5%, silver, small cap stocks, everything. Now why? Well, economics 101. When the Fed cuts interest rates, it makes the stock market go up. And the reason why is ostensibly because as interest rates go down, corporations and everyone else in America can borrow more money at a cheaper rate. For example, if you're in the market for a house and what was basically keeping you out of the market was mortgage rates, and if the Fed cuts the mortgage rate, or that is the interest rates, ultimately the mortgage interest rate goes down along with other interest rates along the curve, and you can go out and buy your house at a cheaper price. Thinking about that, it's the same thing with the stock market. You cut interest rates, boom, the stock market goes up. The question is, how many cuts? And did he really say that he was going absolutely to cut in September? The answer is no, but markets discount the future. So after 4 days of declines, wham, the entire markets went up. I think the S&P 500 index, which is the equity benchmark index, NASDAQ, the Dow, all of them were up over 1.5% for the day. And the small cap index, the Russell 2000, was up 2.5%. Bingo, that's how the markets closed on Friday. Happy days are here again, but it wasn't. And why? Well, over the weekend, investors thought about what the Fed had actually said, and no, he did not say he was definitely going to cut interest rates. And he also said that it was still data dependent. They were leaning that way, but they weren't leaning that way September or October or November, December. He never said when. The markets immediately assumed it was September the 17th, actually, which is 2 weeks away. And how much they were going to cut, if they were going to cut at that time. Well, markets were euphoric after 4 days down. Program traders, all of them, the options market, everything just jumped on stocks and moved up. The weekend, some sanity hit, and people started to rethink, well, if they're data dependent, and we have, as I just mentioned to you on Friday, the Fed's most important inflation point the PCE index, the Personal Consumption Expenditures Index. What happens if that PCE data comes in on Friday and it's hotter than expected, meaning inflation is higher than the forecast? Would that make the Fed delay somewhat or rethink the idea of loosening interest rates? It could. So the markets thought about that and said, well, maybe we've gotten this market ahead of itself. And so, of course, this morning, what happened was everybody woke up and the market was down. All those indexes were down, but not as much as they had gone up. I mean, when I left, I think the S&P was down maybe 20 basis points or, 20 or 30 basis points, something like that, not anywhere close to 1 or 2%. And the other markets had followed suit too. So I'll read this right now as profit taking. But I'm not expecting much in the markets until Wednesday evening when mega cap Nvidia reports. And I think that will guide the market through Wednesday night and Thursday, just in time for Friday morning, 8:30 Eastern Standard Time, when we get the numbers out of the PCE.
I really like watching Chair Powell. He knows the importance of every single word that he uses. And then, that is internationally important and, of course, economically important, but and diplomatically.
Well,
really important.
It is important, and in my column, I'll admit, okay, that I was wondering what was behind this sort of bullish statement from Jerome Powell. Mm-hmm. As you said, he doesn't ever speak accidentally.
No.
What he said was planned, and the fact that he said it immediately out of the gate in his speech was even more of a surprise. Well, I have two explanations. Number one, if you recall, I had talked to you about the non-farm payroll employment data, which has since been revised, showing that we started to lose jobs 3 months ago. And for the last 3 months, the job market has weakened. Now, given that employment is one of the two goals of Fed policy, the other being inflation, that the weakness in the employment market could be pushing the Fed to loosen interest rates because it's one of their two mandates. On the other hand, we have inflation, and we're not sure how high inflation will be or how low. Anyway, normally I would think that the Fed would wait before giving us any hints of a further easing until they saw some more data, which is going to happen in September. They're going to, as I said, the PCE is going to come out this Friday, one data point on inflation. We've got another non-farm payroll report coming out before they meet on September the 17th. And given his background and his caution and his data dependency, one would have thought that they would have waited until they got the data points before loosening or intimating that they're loosening. So then I have a more Machiavellian explanation.
Ooh.
It's just my opinion. However, we're all familiar of the President Trump's pressure on the Federal Reserve and Chairman Powell in particular to cut interest rates. It's been over and over and over again, okay? We also know that there are right now 2 Fed members that were appointed by the president and pretty much want, like the president, to loosen interest rates now, immediately. A third possible member, Steve Merton, who is the president's chair of the economic advisors, he's basically been selected to become a third member this September, if Congress approves him, a third member of Trump's team on the FOMC, Federal Open Markets Committee, voting members, along with your own pal. That's 3. Now, you may have heard over the last week and a half that a 4th member has been targeted by the president.
Cook.
Yes.
Yeah.
To either Lisa Cook, I think it is. Anyway, don't quote me, but he has somehow they have dug up some information that she ostensibly, we don't know, allegedly, in applying for mortgages, claimed two mortgages as her primary residence. She's got 2 houses, and that would be basically illegal. And would it be grounds to dismiss her? I'm not sure, but the president certainly thinks so, and he's claimed that if she doesn't resign, he's going to fire her. That would be 4. Now, there are 12 members, voting members of the FOMC board. If that were to be the case, that's 4 out of 12 that would be President Trump's appointees. That's a pretty substantial number of the board, and there's no question in my mind that he's just going to stop pressuring other members of the FOMC meeting. So we could actually see all the way up, all this year, more and more reasons to do the same thing that he's doing with Lisa to other members of the board.
It's quite frightening going after individuals.
So here's my theory, that Powell, in order to alleviate the pressure on the Federal Reserve, is cutting rates. Sort of a cut in time saves 9.
Oh.
Saves 9 other members of the FOMC from getting pressured by the administration. It's just my theory. You know, there's so many conspiracy theories, I figured I'd throw one out anyway. So that's my theory.
Be very interesting to follow up on that. Okay,
Yes.
We could change a little bit. Last week you mentioned you liked precious metals and cryptocurrencies, which still boggle my mind. How have they done since last week?
You were unbelievable on Friday. Unbelievable. Bitcoin was up, I think it was at 112,000, went to 117, 118,000 in one day. And Ethereum, which was trading at like 4,200, was hit all-time highs, broke them out. Now, I mean, so how have they done last week? Gangbusters. How are they doing today? Well, Bitcoin has given back everything that it made on Friday. Boom, this morning, over the weekend. Basically, you have to remember the cryptocurrencies trade 24 hours a day, 7 days a week. They're not like the stock market. And a lot of investors or traders or speculators at night during the weekend are trading them. And they're not just Americans, they're Chinese, they're Japanese, they're Europeans. Everybody's in this market. So over the weekend, what happened was, they call them whales. Whales are traders, investors in cryptocurrencies that have huge positions. What happened, I think it's Saturday night, one of these whales sold 25,000 Bitcoin. That was, I don't know what price that he or she sold them at, but if you take 25,000 Bitcoins times, where is it, 100, let's say it was at 117,000. That's a huge amount of money. Could have been a government. I mean, there's 2 or 3, 4 governments now in which Bitcoin is an alternative currency to wherever they are, Ecuadorian, Bolivian, whatever currency. So it could have been a government as well. Anyway, when I left, Bitcoin was down at a very critical area at 112,000 Bitcoin. Um, Technically, I don't want to see it any lower than 110,000. If it between 110 112,000. If it gets below that, then I think in Bitcoin's case we've got further downside, maybe down to 107, 108,000. But this last week was fantabulous. Now on Ethereum, which more and more people are speculating with rather than Bitcoin, Ethereum is a cryptocurrency, and it also provides a mechanism, a base for thousands of companies that trade and buy and sell cryptocurrencies to settle, to facilitate those trades and so forth. So Ethereum is not only a cryptocurrency, but it has many, many uses beyond that. And a lot of attention has now switched from Bitcoin into Ethereum. And as I said, Ethereum probably gave back half of its gains from Friday, but not all of them like Bitcoin. So Ethereum is the darling of the week, the darling of the month, and most analysts, technical analysts, think that Ethereum has more to go to the upside. We'll see.
Bill, if you sell Bitcoin, what do you get? Do you get a check? I mean, how do you get the money out of that market? This is so new to me.
It is. So let's say you want to
get American dollars? Or
yes, you can.
Oh, okay.
Yes. What happens is you open an account in, let's say, Coinbase or any of the other various cryptocurrency trading firms, and you put, I don't know, $1,000 in your account in dollars. And you say, I want to buy $1,000 worth of Bitcoin. They buy $1,000 worth of Bitcoin for you, and it's in your account. And let's say Bitcoin goes up $5,000. Well, now your investment is worth $5,000 more, and you decide to sell it. So you go in and you say, sell whatever amount $1,000 had bought you. Let's say that would $1,000 would be 1/118th of a Bitcoin, and then you sold it at 123,000 of a Bitcoin, and you would bank those profits. Now you could take that money out of Coinbase or Coin Market or whatever other trading entity that you decide to put your first $1,000 in, and when you say sell it and give me a check or send me a check, or do it electronically into my banking account, you'll get that money back in dollars. Now, here's another thing. That's a pretty complicated thing, right? You have to open Coinbase, get an account, take the $1,000, US $1,000, give it to them. They then take it to change that into Bitcoin. It goes up, they sell Bitcoin, then they have to change that back into US dollars, and then that check to you.
But it's pretty liquid for you.
Yes, but here's the thing. Remember I've mentioned to you that there is a new entity. There's going to be a new entity which shortcuts all of that and makes it much easier. In fact, it's called stable coins. If you recall, we had a discussion on stable coins. Think of them as a money market fund, it's the best thing I could say is a money markets fund, okay? And these stable coins is going to cut out the middleman of going from Bitcoin to US dollars to you, or US dollars to Bitcoin to whatever. A stable coin is going to act like a mutual fund, a money market fund. You have that same $1,000 that you're putting into Coinbase. They immediately buy a stable coin. That money is yours. It's just as safe as the US dollars, because what they do is the stable coin itself, the money market stable coin, is backed by US Treasury bills. That's what they do, okay? So US Treasury bills don't really move at all. So that money is as safe as, say, a money market fund for JP Morgan or Charles Schwab. And then from there, you can either use the stable coins. They're thinking many banks are going to offer you stable coins. Now, this isn't going to happen over the next 3 months, but I think by sometime next year, you're going to see a lot of the major banks have a stable coin, and you can put your money in a money market fund or a stable coin fund. It won't matter.
Really interesting.
So it'll make buying and selling of crypto facilitate that.
Okay, last week you also mentioned that if the Federal Reserve cut interest rates, you thought it would be a policy mistake?
Yeah.
Why?
Because of the inflation rate.
Okay.
I expect inflation to continue to click up between now and the end of the year. Why? Because more and more tariffs are now going from companies, and the additional costs are going to be passed on to products more and more as we go along through the year. And the data seem to suggest that. That's going to tick up inflation. And at the same time that inflation is ticking up, you're going to cut interest rates. I think that'd be a policy mistake.
Again, last week you wrote a column on Trump accounts.
Yes.
What are they, and why should any of us care?
Well, in my column, I did make a mistake on that. Trump accounts is part of the tax and spending bill that was passed by Congress recently. One of the things that is in that is what is called the Trump accounts. I don't know if that's really the name of it, but that's what they're calling it. And what they're going to do is they're going to give $1,000 to every newborn American child
Okay.
starting in 2025. It might take till the end of the year or next year before all the infrastructure and so forth is created, but that's the intent. Now, what I wrote in the column, which created a lot of misunderstanding, was that $1,000, if left in there until retirement age, would be worth a little over $53,000 if you invested it in the market at 6% return a year. But the real question was, if you invested, if you followed the government's lead, that seed money that the government is putting into that account on day one, if you followed up, or a friend, family member, even your employer, followed up each year and put an additional $1,000 a month, $1,000 a year in that child's account, and let the child does not touch it, as I said, until they retire, let's say 67, 68, they would have in that account well over $1 million. That would solve the Social Security issue for future generations in this country.
Wow.
Yes. Now, unfortunately, because I didn't make that clear, my readers thought I meant that $1,000 one time was going to equal over $1 million, no, that's not the case. Okay, as I said, it would be $50-some thousand, but it wouldn't be anywhere close to $1 million. But you see what I'm getting at. Okay, 50% of Americans have nothing saved. So this is a great idea in my mind, and they're this government's giving the seed money to do such a thing. And I'm hoping that what will happen is even the lower income Americans will put that money, that first 1,000, in the S&P 500 index, for example. And by the end of the year, they see that now they have $1,600 or whatever in it, and they say, oh. And then they or one family member or whomever will be encouraged to do the same thing in year 2 and year 3 and year 4. And then we'll have no problems with Social Security for all the generations to come. That's what that meant.
That's another discussion on
Yes.
Social Security at another time and
Yes.
how it should be
Right.
rectified as far as I'm concerned. And our final question is, what is your outlook for the remainder of the year?
Oh.
And how do you do that?
How do I do that? No one ever will know I don't write an outlook for the year. Okay. So many people on Wall Street will say, well, this year I'm expecting a 10% return or a 3% decline. Today, markets are too wild and crazy, and the government has so much more to do with what the markets end up being at the end of the year, and governments are unpredictable. You're getting into the realm of politics. So I don't predict on year's basis because most everyone gets it wrong anyway. But what I'm thinking is this. I'll give you September, October is the toughest time in the markets. I think we'll go up another 100 points at most on the S&P 500, and then we'll have a pullback again sometime in September into October. I don't see it as being a terrible pullback, but a good 6, 7, 8%, something like that. And then sometime in the end of October, beginning of November, December, boom, we'll gain and finish the year probably where we are now or a little higher. That's my guess. But buyer be warned, I will change that in the blink of the eye, depending upon what the government, our government especially, does, which could change everything dramatically. So, but
there's so much going on
and
so quickly.
And there will be this week and next week and the week after. And that's about all we have. But again, what I wanted to say to you is if you had a question that I didn't answer and want it answered, or you didn't understand anything or some of the things that I've said, remember, email daltonctv@gmail.com. Write it down, daltonctv@gmail.com.
And having a little fun. I'd like to see if anybody could stymie you with your encyclopedia.
Well, yes, I can't wait for the question that's going to make me stutter. And I will tell you, I don't know.
Stymie you.
Okay, the day that I know everything is the day I stop learning.
Oh, we never want to do that.
No.
This is delightful. Thank you, Bill.
You're welcome. See you next week.